Hello everybody, this is the natural gas short trade on a 15-minute chart that really provided a nice multiple. Well, let's have a look at this. This is an S2 pattern. S2 is an harmonic pattern, and it's basically, well, it's framed here. This is the midline. It's a horizontal line that basically is centered around the middle part of the pattern. And this is the angular test line. It goes from the highest high along the lower highs on the right side. So the important part basically with all three future systems is a test bar. This is the test bar, the green one with the big wick, and it needs to test the midline and the angular test line here from below to above. And that basically sets the trade. And in order to get into the trade, well, what needs to happen now, so now it's the stalking phase. What needs to happen is the price basically comes down and re-breaks this last low. So this is the entry and this is where the stop goes. So the stop is set out, the stop sell order with the initial stop loss attached, and you can basically leave your screen, right? Either it triggers or it does not trigger. Now this is the 15-minute chart. This is the 60-minute chart. That's our mid frame. We need a touch of 21. This is our 240-minute chart where we need a trend, and that's our daily chart. So there's a lot of potential. This is a trend following system, and we're nicely downtrending here in the bottom two charts. So let's see what happened. So it didn't trigger an entry immediately. Well, this is resistance, the last low. So it came here, bounced off, came here, a small little bounce, and that then triggered the entry with the stop here. And what we see here, well, this is a stop run move, right? A one leg move, an exponential move. Coming down here, breaking the last low, that creates momentum. Well, we see a big red bar, right? And then what we see else as well, well, that was one of the edges of this trade, that in the mid frame, one time frame higher, we had nicely the stop run levels aligned. Well, they're all at the same level, right, around here. And this bar, this is a big 60-minute bar. Well, this takes out the first stop run level, and it's basically as well testing, or has not yet fully taken it out, but we're basically crushing through, making a new low. So that looks very bearish, right? Well, at that point of time, this is a profitable trade already. Even when stopped out, it's a nice trade. So having gone through this resistance line, well, now there's another consolidation forming below, right? We've got a momentum move, we've got a consolidation. Well, typically what we get another move lower. So the stop got a bit tightened. So if that's a stop out now, well, it's well above 2R that this trade generates. So the stop is at a conservative level. We don't want to get stopped out immediately here, just with a small pullback. We're basically waiting for this consolidation to play out and hopefully then to break to a new low, because this is a trend following consolidation, a momentum move, trend following consolidation. Well, let's see, the stop is still at a good level, right? It's protected by this last high. This didn't take it out. This didn't take it out. And as it is sometimes, well, this is the stop out. Well, it didn't develop further follow through here. Well, now with such a long consolidation, well, the question is this now a pattern, one time frame higher on the 60-minute chart pattern? Because we've got a momentum move and we've got a consolidation. This is actually system one, the Gecko pattern consolidation, and we're just forming here a test bar, which is so important, right, for all three systems. Now, is this a trade? Well, we need to look at another 4-chart layout where the 60-minute is on this side, top left. This is our low frame chart. Let's have a look at this. So this is the exact same thing, right? 60 to 40, daily, weekly, and again, the trade needs to fill the rules on these 3 time frames, multiple time frame rules, right? We're basically waiting here as well for an entry into this pattern. Let's see what happened. Well, it never happened, the entry, right? It went up and then much later came down. Well, that did not fulfill the idea of having a low risk idea, right? If this had rebroken quickly, right after the test bar, if it rebroken the red line, well, there would be another entry signal short to continue this down, right? So not all of those signals obviously generate an entry, but the patterns that go hand in hand with the momentum move give you clear guidance what to do. And we need not only the low frame, We need as well the mid frame to fulfill a couple of rules, and we need the high frame that gives us the trend, and that is a really strong trend here, right? And here on the high frame, we can actually see that there's more room to go for natural gas. It can even break to a new low, so there's good potential, still good potential on the downside. It's basically the last commodity here in our list of commodities we trade that has not yet entered into a long-term bull, right? So natural gas will basically be the last of those to enter into a bull when it has ended this down move, and that will be interesting to trade natural gas long then.